Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Friday, June 23rd, 2023, and this is Blockhead Traders Weekly. In this week's episode, I am going to talk about a single topic here. It's just myself, and we are going to talk about how to always be prepared when it comes to trading. But before we hop to that content, I want to give a shout out to our Discord, a link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. We'd love to hear what you're trading, love to hear what type of content you want to hear about. You can also find a link to thetagang.com/sprocket888, where you can find each and every one of my equity trades, the good, the bad, and the ugly. Lastly, you can pick this episode up in audio-only format wherever you get your podcasts. And if you don't find it there, drop us a line and let us know, and we will get it there. But let's hop to this week's content. In this week, I want to talk a little bit about being prepared for something. And not so much on the actual preparations that you're going to take yourselves, but more just on the concept of why we need to be prepared and what we kind of need to be prepared for and the psychology that kind of goes along with it. Recently, we were really talking about, how bubbles get formed when different traders are basically trading, assuming that other traders are playing the same game that's in their mind. But really, there's multiple different games going on in the field. And so this is kind of a continuation of that dialogue. It's just another aspect of it. And that is really about being prepared. And where we're going to start off on is just two things that, jump out at me as famous quotes. The first one is a quote by Scott Sagan, who is a political science professor at Stanford University. And it goes, "Things that have never happened before happen all the time." And that is kind of an interesting thing, especially when you pair it with the famous quote by Mark Twain, "History never repeats itself, but it often rhymes." And where this kind of draws relevancy in my mind to the world of trading and investing is very frequently traders, investors, people that are participating in the stock market, bonds, any sort of speculative trading or investing have a tendency to look back in history and kind of assume that the same sets of things that have happened previously will happen before. So some big takeoff event will happen again. And so they're always looking for how the stuff today lines up with events in the past. And the fallacy there, which is kind of where Scott Sagan is kind of coming from here, is that people are shocked when something happens like, "Oh, I didn't see it coming. That's never happened before." And to his quote is, things that have never happened all the time. Basically, everything that happens has pretty much never happened before. It's all kind of new. And the idea that things just repeat themselves from the past is just not true. And that's what Mark Twain is referencing. He says there are similarities to stuff like that, but it's not ever the carbon copy of, "Oh, this happened before, here it comes again. It's going to be the same thing." So it's okay to look back to understand concepts, trends, stuff like that, but to think that things will repeat itself or that the history is a perfect guide to predicting the future is just wrong. And you'll be sorely disappointed, and probably you'll be caught in one of those things where you'll, either have a big loss or some big impact, and it'll be, "Oh my gosh, no one could have ever seen that. That's never happened before." And the premise of all this is we have to be prepared for that. So these two quotes kind of together bring me to two topics that I think are very kind of important to cover, or two thoughts that stem from that. And the first is, because so much of what will happen is going to be unscripted, unpredictable, we absolutely must be prepared for the worst set of events that could possibly happen. And it's not the worst possible events that have a probability to happen or are likely to happen. It's using your imagination to try to say, "I'm going to prepare for the unimaginable." So, that's when you get into an investment. A lot of what Viper and I talk about is you need to be prepared for what if that goes to zero tomorrow? What would happen to you? And go in with that mindset of the absolute worst case scenario, even if it's not probable, such that you always have that in the back of your mind, and it puts you in more of a defensive mindset. And so this is super important because it will tip you to, good position sizing, not risking too much on any one trade. It will force you into looking at the probability of a particular trade panning out. The lower the probability, the higher the risk. And, maybe that's a trade that you don't want to take a lot of because it's unpredictable. And if you load your plate up with these high risk, low probability trades, and the worst case scenario happens in those, then you can really be wiped out and taken out of the game. And you have to remember that when we talk about trading, investing, kind of contributing for that wealth building, it's not a finite game. And that's a very, very important aspect to remember, because when you're playing an infinite game, there is no winner. There's no such thing as victory. There's no such thing as crossing the finish line. So there is no end to that game, and there can be no winner. Now, there can be a loser, and that's exactly what you need to strive to not be in, and that is somebody who loses that infinite game. And the way that you lose an infinite game is you cannot participate, or you choose not to participate, or your resources have been consumed and you cannot participate. And that's really where the loss comes in. And so all about this investing, all about this trading, all about this preparing for the absolute worst case scenario is all about preserving enough resources to stay engaged in the game, because that is the only way to not lose that infinite game. And to go to that concept of an infinite game, why do you want to stay prepared, and why do you want to stay engaged in that game? And the answer to that is kind of simple, and it's kind of interesting to think about. And that's really because you don't know when, where, or what the next thing is going to be that's going to take off and really be that wealth builder. And many things will be, hitting those singles, picking up dimes, nickels, quarters, but scratching on that lotto ticket off, you don't know where that lotto ticket is going to come from. And so the only way to increase your odds of participating in that event, of that occurrence of the lotto ticket that you might find in some of your trades and things that you're putting out there, is to always be investing and always be playing and always be in the market, because exposure is the only way to increase the probability of coming across that. Now, to highlight this concept of, not knowing when or where the differentiation event is going to occur, let's just take a look back at the 19th and 20th century to a few different notable people that existed. If you think about the number of people that were born into existence in the 19th and 20th century, it's upwards of 15 billion different people entered the world. And, this is not an all-inclusive list of the most influential people in the world during that time period, but these are names that everyone will recognize. And I just want you to think about, what would the world be like if these individuals didn't exist? So these are only 5 names out of 15 billion plus names. And just think about the knock-on effects and consequences that came from these particular individuals. Bill Gates, Thomas Edison, Martin Luther King Jr. Just look at these individuals and think, how different would the world be today if those people didn't exist? And that's the same concept that I'm talking about in the world of investing in equities, in stocks, in companies, is you don't know what the next thing is that's going to cause a cascading failure or a ramp up and an entirely new segment and industry, and a center for that wealth growth. And the same thing, we can take a look, go into influential events. Think of all the events that happened in just the last 100 years, and just consider what would the world be like If these four things never happened, the creation of antibiotics, World War II, the Great Depression, the invention of the PC, think about all the change and stuff that those initial events kind of drove. Think of all of the subsequent opportunities, catastrophes, and negative events, positive events, everything that stemmed off of just those four tiny events that occurred over the last, 100 years. And that's really where I'm going with this topic of, you got to be prepared for the worst, the best. And the only way to really have that preparation is keep your position sizing small, diversify across a lot of different industries, a lot of different segments, a lot of different financial products. Have your strategy such that when you have your winners, you let them ride to your price targets and you manage your losers quickly, because managing your losers quickly is super important, because that's what allows you to preserve your capital, preserve your wealth, so that you can stay engaged in that infinite game. If you put an oversized bet on black or an oversized bet on the roulette wheel for one number, and you put all your chips on the table and you miss it, then you're done, you're out. But, if you put bite-sized bets across the roulette wheel over time, and you stay in there, and that broad exposure, that managing your risk, that keeping your position sizing small, it goes to that famous saying that time in the market will always beat timing the market. And that is just another way of saying that all of these unpredictable events, all of these events that have never happened before, that are bound to happen for the first time, some of those events are going to be moving the needle type events, but we cannot predict when and where those will occur. So the only strategy that we have that increases our probability to be there for those events is to spread our chips across the table and be in the market as much as possible for as long as possible to increase the probability of hitting some of those rare types of events that completely change a particular sector in the investing world. And that brings us to the end of this week's episode. The correct takeaway here for this is that the only thing that we can learn from the history and the surprises of those the history of those surprises is that the future will be surprising. There is no way that we can predict what will come, what will be there, what will take off, what will crash, what will burn. All we can know is that whatever is the next thing that goes to the moon, whatever is the next thing that brings catastrophic collapse, will be unpredictable. It will not be what we think it will be. It will be a surprise. And the only way to prepare for that is to be prepared to best we can for that which we cannot imagine. And the preparation that we take for that is really a mindset of the unexpected is always around the corner. And if we always have that in the front of our mind, and that is guiding the risk that we take on, then we are in a better position mentally, psychologically, to scale back that risk, put it in an appropriate size such that it is properly weighted against our capacity for risk appetite, such that we can stay in the game without being kicked out too early. We can keep those resources, we can preserve that capital, we can preserve that wealth to keep playing the game, because that's the only way that we're going to catch those outlier events, and that's the only way that we're going to catch those tidal waves that will really uplift and build generational wealth. A lot of activity going on in the market, kind of doing a little bit of a retracement on all the indexes. We've had quite the run over the past few weeks to really kind of record highs in the past 52 weeks, the past trading year. Things are looking really up, but we're kind of in a big retracement here. And so managing that risk, preserving that capital is something we all got to do. Hopefully you're able to go out there, take profits where you have them, put risk mitigations in place as we kind of do this trace back. And keep your eyes out there for bargains. Keep your eyes out there for the next trade because they're always around the corner. Keep that position sizing small so that you can keep lots of chips on the table across the broad spectrum and diversification of things to play so you don't miss out on that next rocket. And remember, think outside the block.